you didn't like that sell-off that we had with the yen carry trade, again, it just tells you you've got too much risk in your portfolio. So use this rally here. It's a great time to rebalance a little bit. Let's talk about what you need to know before the bell. Tomorrow is the big day, right? The Fed's going to cut rates. Markets have been rallying very nicely in anticipation of that. Yesterday, we rallied, started off a little bit weak in the morning and then turned around in the afternoon, rallied up into positive territory, finished the day in a positive, back at recent all-time highs. So we have just kind of remained in this consolidation now for a bit of time here, just trading above the 100-day moving average. As we've talked about before, we had a very nice reflexive rally kind of coming off these August lows and have been building kind of a pattern of higher lows at this point. So if the market can break out and form a bit of a higher high here, then we're going to kind of continue this trajectory. And again, tomorrow will be a good indication of what happens next. But importantly, right here, as we were selling off, that was that yen carry trade crisis issue. That's where stock buybacks opened back up. The window for buybacks opened up right at that point. And as soon as that occurred, we had a lot of buying come into the markets by corporations doing their share buybacks. That window now starts to close starting today. So we are now moving into, we're about 2 weeks out now from the beginning of corporate earnings season, which begins in the first week of October. So that window, that buying power kind of for the market is going to start to fade here. So it may be, not today in particular, but over the next couple of weeks, the number of stocks that are going into blackout from buybacks is going to start increasing. And by the time we get to the end of the month, we'll be at about 100, close to fully blacked out for buybacks. So again, this kind of lift that the market got from buybacks is going to start to fade. So again, there's going to be less buying power here. And again, the question, as we've talked about before, is that this rally is very nice here. We're on a buy signal. We're getting overbought, but we could go a little bit higher here. Remember, markets can remain overbought longer than you think. But we are on a buy signal here at a decently high level. So again, we may get some more upside out of the markets here near term, but potentially with some of that buying support coming out of the markets, upside may be somewhat limited. So if you got caught in this downdraft and your portfolio kind of got rocked and you didn't like the way that felt, use this time right here. Don't get overly exuberant here as we start to move into the last half of the year. We are seeing some signs of economic weakness, not necessarily a recession, but could impact earnings. But, if you didn't like that sell-off that we had with the yen carry trade, again, it just tells you you've got too much risk in your portfolio. So use this rally here. It's a great time to rebalance a little bit. Cyclicals have been really outperforming defensive stocks earlier, but really ever since kind of coming into this summer period, defensive stocks like utilities and real estate have gotten really extremely elevated. We've had very, very strong runs in defensive stocks as of late. So again, that's a good time. We're going to be looking at doing this week, as potentially rebalancing some of that risk in the defensive sectors of our portfolio, which have really gotten very extended here in the short term. And we're seeing hedge funds now starting to rotate back into mega caps anyway, kind of that cyclical defensive rotation. And that's not really surprising. Markets kind of ebb and flow over time. So take a look at your defensive holdings. If they've gotten really extended here, really overbought, just rebalance back to target and maybe look at some of your more cyclical stocks potentially heading into the end of the year. And with rate cuts kind of behind us, maybe start to look to rebalance those positions as well. That's what you need to know before the bell this morning.